Hey, good evening to all our viewers. Hello and welcome to this live broadcast here at Moneycontrol. You're watching Earnings Express. I'm your host, Stacy Pereira. And we are here to discuss Wipro's Q1 earning numbers, which were out just a short while back. Now, the IT major has reported a mixed set of its first quarter earnings, we would say, where the rupee revenue and margins are pretty much in line with expectations, though the dollar revenue that one was expecting a little higher has in fact fallen this time around to 2,625 US dollars. The net profits though are up by 4.6% on a year-on-year basis, this coming in at 3,003 crore rupees. What is interesting and what most IT companies that we've heard in this Q1 has gone on to increase their guidance. Wipro too, just on those similar lines, but we would say rather muted guidance that it has given even this time around. We can also say that for this, of course, for the second quarter. Now, let's discuss these numbers in a little more detail and what it actually means for India's fourth largest IT company. Joining me to understand and do some bit of number crunching is Kranthi Bathini. He is an equity strategist at WealthMills Securities. Thanks so much, Kranthi, for joining us here at this live broadcast. Let's look first up at the numbers that we're seeing coming out of Wipro, and pretty much we would say at least on the margin front they have delivered. It's come in somewhere around 16%, and that is something that everyone has been looking out for when it comes to IT companies, given how the previous few quarters have been quite muted for them. But with Wipro specifically, how are the numbers really looking? If you have to give a broader view, how are you gauging these right now?
Hi, Stacy. Good evening. Yeah, the fourth largest IT major, Wipro, has announced the results, and we can see the mixed sense with respect to the numbers are concerned. Overall revenue has been slightly down, but it is in line with the market expectation. But the profits are went up slightly. But what we can sense from these majority of these IT companies' earnings is. The outlook seems to be sanguine with respect to the IT companies are concerned, and the order book deal win for Wipro also looks very strong, and the management commentary, the initial management commentary, looks pretty much confident for the management. The worst is behind for them for majority of these IT companies, including Wipro. So we can need to wait for some more time at least to get a greater clarity with respect to how the earnings momentum that's going to rise, at least in the next coming quarters. But the initial commentary looks confident that worst is behind for majority of these IT companies.
Right. In fact, Kranthi, we have been hearing even, Infosys and all of them during their question and answer sessions, they keep and repeatedly saying that maybe we are not out of the woods completely, but we are seeing those green shoots of recovery. But, when you're just comparing the guidance that they're giving, and that should give some sort of relief for Wipro specifically, they are expecting revenue from IT services segment at least to range from somewhere around $2.6 billion to $2.65 billion. This would translate to sequentially a guidance change of from that -1% to 1%, and earlier they had actually slashed that guidance last quarter to -1.5 to 0.5. So you're seeing that some basis points rather change, but what do you think is giving them this hope that they see a better quarter going ahead? What really is going to be working for IT majors like Wipro and the others?
Stacy, especially the North American region, the growth has been good, and one rate cut, at least with respect to the banking and financial services are concerned. They have been waiting for a rate cut for just to see the business expansion further. So right now, the corporates in US, they are in a wait and watch mode at this point of time. They are not in a hurry to increase their capacities and increase the expansion of their businesses and IT budgets. That's where the overhang on these IT companies. So once the clarity emerges, we can see the order book winning momentum to go up, and also the margins recovery we can see in the coming next few quarters. So right now the logjam and the the overhang for these IT companies are concerned, the majority of their clients have been in a mode. They're not increasing their IT budgets in a exponential exponential way. That's where the overhang on these IT companies in a medium to short term. So the US economy, first and foremost thing is it's going strength to strength. Okay, that's where the confidence is rising at this point of time. But IT budgets is not moving as expected. That's where the overhang with respect to the margins are concerned in a medium to short term basis. So what we can sense at this point of time with the numbers, what we are getting is the worst is behind, but they are cautiously optimistic with respect to the coming quarters are concerned.
Right, so that cautious optimism is what even the managements have been delivering. But now one thing that we speak about, especially when it comes to IT firms, is attrition rate and head count. And if I have to look at those numbers for Wipro specifically, they've only added 337 employees in the first quarter, and this comes especially when there is this whole rejig within the company, and they're looking at different hiring models compared to the others. And the head count, in fact, is somewhere stands at they've added fewer employees this time around, 15,367 employees on a year-on-year basis if you're going to compare this number. So, attrition rate also for Wipro is 14.1%, which is lower, but, they are seeing that semblance. Do you think there is, people are coming back to IT, looking at it as a place to be, or because at one point startups had taken that feature from IT companies, then you have now generative AI, which has become pretty much the buzzword for these companies. But when you look at how the personnel or the attrition headcount rates are, does that seem some kind of alarming when it comes to all of the major IT companies?
It's not, Stacy, you're absolutely correct. Okay, there is the choice for the NG has been going up. One hand, we have the startup culture, and also the new opportunities are emerging in various subsets of IT also that has been taking place at this point of time. But on a medium to longer term basis, I don't think it's not been a concerning area for the companies. Okay, they have ample workforce at this point of time, and they have been doing here and there the recruitment, and also the campus appointments have been, they're issuing the campus recruitment and the letters to the new students. But the overhang is once they get the clarity with respect to the new order books are concerned, once they get the clarity with respect to the new assignments are concerned, that's where they can increase the momentum with respect to the hiring is concerned. Right now, okay, many of these IT companies are going at a very slower pace with respect to the recruitment is concerned, and especially for Wipro, that's where they can improve the margins by cutting the cost in the medium to short term. Once they get a clarity, they can go full-fledgedly, because another couple of quarters time is there to ramp up the recruitment drive is concerned.
Yeah, interesting. In fact, we are going to hear from the management in just a short while, and we'll see what they have to say, especially, the commentary from the new management that has taken over after that Thierry Delaporte phase for Wipro specifically. But if you have to look at the stock, that is something that has seen some major gains, at least in the last 2 months alone. Wipro has seen some good upgrades that have come from a couple of brokerages on the stock that has seen it rally about, I think, in just the last 2 months since June, about 27% that Wipro is seeing. But also, what is making this one the outlier? And if you do have a preference between IT stocks, does Wipro still feature in, or what would be your pecking order?
Yes, Stacy, it's a very interesting question you asked. Yeah, with respect to the stock performance is concerned, in terms of the long-term averages are concerned, the valuations looks attractive for investors who are coming with a time horizon more than 1 year. That's where Wipro could able to take the edge and exhibit the outperformance with respect to the stock performance is concerned. In terms of the pecking order is concerned, our always the favorites remains the bellwether companies like starting with Infosys and TCS, and the third one we can add Wipro, with the given the kind of resilience the stock is exhibiting at this point of time, and also the valuations on a longer term basis looks very attractive with respect to the new management. But still, we are not in a hurry to add these companies in the portfolio immediately. We are going in a staggered manner, accumulating these chips at a dip whenever there is a dip market is witnessing.
Right. In fact, for the stock price, Wipro's prices did rise about 3% yesterday. Today, again, touching new 52-week highs, closing somewhere around that 573 rupees a piece. But my final question to you, Kranthi, at least before we get the management and what they have to say. When you're looking at IT companies, we've been saying, even you mentioned that we are likely to hear a September rate cut for in the US, and the Fed rate cut would see better kind of spending perhaps for these IT companies, better deal wins or bigger deals per se. But when you look at what generative AI or what tech stocks are doing internationally, we've been seeing a rally when it comes to the likes of an Nvidia or the others. But there is also that rotation that is happening at the same time. Do you think that kind of fate can also happen here in India, or we have a very different ball game when it comes to IT companies and how that is going to work out for the likes of a TCS, Wipro and others here in India?
Yes, Stacy, with respect to the Indian companies are concerned, we are by and large a service-oriented company. The product innovation is going at a very slow pace with respect to the Indian IT companies. Of course, they are innovative in terms of the service models are concerned. With respect to the new age dynamics are concerned, that's where the Indian IT companies have to gather their momentum in the coming years. That's where the underperformance of our IT companies in the past, what we witnessed when the mega 7 of US IT companies, when they have been rallying, whereas the Indian IT companies are in a subdued performance they exhibited. The one thing is, by and large, our companies are in service-oriented companies, but our endeavor is to see the names what you mentioned in your conversation, that kind of business models our IT companies has to emerge. But AI has been majority of the IT companies and the managements of the companies have been focusing to develop the systems over a period of time. Once we join that league, we can see the market capitalization of the companies rising and joining the world league. Currently, they are by and large catering to the service sector of the IT is concerned.
Right. But do you think that, a lot of these are just pipelines or deals that they are hoping will turn around, especially when it comes to generative AI? Do you think we've, ramped up our skill sets and the likes to actually be delivering this kind of thing? I don't think we've heard any big deals already within this space. These are still just, the deals that they're chasing, most of these companies are chasing. So do you think it just seems like, cloud in the air at this point, or do you think that we can actually go on to be delivering this kind of product or even service within the generative AI space?
Stacy, you are absolutely correct. Okay, but the new age dynamic products are concerned, the generative AI and all. The large cap stocks, the bellwether stocks have been finding the headwinds at this point of time. We don't see any kind of significant order wins in this line. But the interesting part is the mid and small cap IT companies we interact. They are quite confident that they can win these kind of deals. So we need to, the space, what you mentioned looks very interesting, but the majority of the commentary and the confidence is exhibited by the mid and small cap companies than the large cap bellwether companies are concerned. It's a very interesting space. So we need to see how these large cap bellwether companies are going to take the advantage of these kind of mega dynamic products are concerned.
Specifically, Wipro hasn't seen any of those mega deals, as we call it, the ones that are 1 billion above. For a long time, they were stagnating compared to its peers. Specifically, now, yes, they've gone on to announce a couple in the previous quarter, which is why you're seeing that large deal number also there, somewhere around $1.2 billion. But do you think that could be a worrisome area, at least for Wipro specifically? And do you see or there could be better prospects and they could see better deal wins in the coming quarters?
See, with respect to the banking and financial services in US is concerned, it went through a rough patch and they are in a maturity mode at this point of time. Once we can see the resilience and also the expansion of the sector, we can expect some kind of the mega deals, $1 billion deals from this sector. So we need to wait and watch how the things are going to pan out in US because we can expect some kind of policy change and policy uncertainty that is there in US and also coupled with the Federal Reserve decisions. So these are the points we need to wait and watch how things are going to be how the new administration or if there is a change in the administration, how the entire corporate treasure looks in US. That's where the overhang for these companies. But fingers crossed, we can expect a positive momentum from US also.
Well, quite interesting. But I also want to quickly get your view on, when people are building their portfolio. Now, IT, of course, has a major weightage when it comes to the index as well. And people would say it would be safer then to, go through the index. But if you have to choose between, the big large cap players versus your mid cap IT, is there a preference within these two? And do you think, people would still stick by the bigger names and there's too much risk in the smaller ones?
Stacy, it all depends upon the portfolio construction. First and foremost is what kind of business model these companies are in and the geography the companies operate and also the domain expertise, the way these companies are operating. So there are some small cap and mid cap companies because of their strength in their specific domain and the geography they operate, they have been outperforming. And with respect to the portfolio construction is concerned, for a medium to longer term basis, we have been accumulating the large cap because of the strong business model these companies have built up over a period of time. So on a longer term basis, these companies, the valuations looks very attractive on a longer term basis. That's where the portfolio construction should be. We might underperform for a couple of quarters, but given the nature of these business models are concerned, we are buying these companies on a medium to longer term basis.
Right. Quite interesting there. Well, Kranthi, Bathini, thank you so much there for giving us perspective, helping us understand where, Wipro really falls in the scheme of other IT companies and what's ahead for the outlook for the IT sector. But there on your screens, you can see the management there for Wipro going to be addressing the media on their Q1 numbers. Let's cut across to that.
Thank you, Nisha. Hello, everyone. Thank you for joining me and my leadership team for our first quarter results for the financial year 2024-25. Over these past 90 days, I have traveled across our markets, meeting clients, employees, and of course, engaging with partners and stakeholders. With each conversation, my appreciation of our business has deepened and my confidence in our team has grown stronger. It's truly inspiring to witness the trust of our clients placed in Wipro. Additionally, I've been able to hone the focus of our 5 strategic priorities that I shared with you last quarter. I'll be providing with you an update on this shortly, but let me first start with the financial highlights of the quarter. In quarter 1, we did not see a significant shift in the demand environment. Clients remained cautious and discretionary spending continued to be muted. Our IT services revenue for quarter 1 was 2.63 billion, reflecting a sequential decrease of 1% in constant currency, which was within our guided range for the quarter. Operating margin was 16.5%, an increase of 0.1% over the last quarter. Let me now provide you with some color on how our SMUs and industries performed in quarter 1. I'll begin with Americas 1, which delivered a sequential growth of 0.4% in quarter 1. You may recall that Americas 1 had a good year in financial year 24, with the health and technology sectors leading the way. We now see momentum in consumer and communications sectors also in this SMU. Americas 2 had a sequential decline of 0.7%, but BFSI, banking, financial services, and insurance performed well, achieving a sequential growth of 1.4% in Q1. In fact, with a year-on-year growth of 12.1% in Q1 bookings in Americas 2, we are optimistic about returning to growth in this market in the medium term. In Q1, we also maintained positive momentum in our Capco business, achieving a sequential growth of 3.4%. However, Europe and APMEA remained soft for us, with sequential declines of 1.4% and 4.2% respectively. Our pipeline in Europe remains healthy, and our primary focus there will be on improving conversion. We are also reviewing our strategy for APMEA and will keep you informed of our progress in the coming quarters. Let me now talk about the industry sectors. We had a varied performance. Banking and financial services retained its positive momentum from last quarter, and we have now seen growth in this sector for 2 consecutive quarters. This sector grew 0.5% sequentially in Q1. Driven by deal flow, the consumer business grew by 1.6% this quarter. However, manufacturing, energy and utility sectors continued to show weakness for us, experiencing a sequential decline of 3% and 6.3% respectively. Moving to order booking, our overall booking TCV for the quarter was 3.3 billion, with large deal TCV of 1.2 billion. Now, let me update you on the progress we have made on the 5 strategic priorities that I outlined last quarter. If you recall, hopefully you'll recall, we discussed prioritizing large deals as a clear area of focus. We are driving large deal creation systematically across our client base. We are shaping these opportunities proactively, engaging with influencers and partners. As a result, our pipeline for large deals remains robust. Once again, we had a quarter where our large deal bookings exceeded $1 billion. Our success in securing 10 large deals in Q1 was the key factor that made this possible. Let me call out 2 of the deals that we signed in Q1. The first is with a US-based communication service provider, where we were chosen for a 5-year contract to provide managed services for select products and building industry-specific solutions. I know many of you have written this in the newspapers already. The second win is in the automotive segment in manufacturing. A US-based OEM has selected us to streamline their global infrastructure services. We will actually develop a solution leveraging both automation and AI to improve user experience and reduce operating costs. Our next area of focus that I had called out is to strengthen our relationships with our major clients and strategic partners. We are investing in our established strategic accounts and also in high potential accounts. Our focus will be on those clients within our priority sectors and markets we have called out. In fact, we'll further strengthen our capabilities in consulting, delivery, and solutioning in these accounts. We are also actively collaborating with hyperscalers and our strategic partners to co-innovate and develop unique propositions for our clients that we have called out. I would also like to emphasize that even in an otherwise soft demand environment, our revenue from top 10 accounts have grown 1.3% sequentially and 3.8% year on year in constant currency terms. The third key priority I had previously highlighted is to develop AI-powered industry and cross-industry solutions using a consulting-led approach. Here, our goal is to help clients transform their business and operating models using the power of AI. We are also actively strengthening and accelerating our industry consulting capabilities to support this. We will continue to build cross-industry solutions that will deliver value to clients across our horizontal play. Let me give you two examples of our recent wins in Q1. One, in the healthcare sector, we have been selected by a leading US-based health solutions company to help them comply with CMS guidelines. Our consulting-led AI-powered industry solution will seamlessly integrate CMS provisions into billing and various other processes for the client. This will simplify prescription cost management for all their members. And the second example, we are collaborating with a leading financial services company in North America to develop a Gen AI-powered assistant for wealth management to help portfolio advisors. On a lighter note, wealthy people are getting wealthy, so this solution will really help them. Let me now shift our next area of focus, which is building talent at scale. Our goal at Wipro is to attract, nurture, and grow a diverse talent pool. We have ramped up our upskilling efforts across various practices, covering both emerging and core technology areas. In fact, in Q1, we rolled out iAspire, an AI-powered career development platform. This platform, iAspire, offers personalized learning pathways and aids in the career progression for each and every of our employees. We have already provided foundational training to over 225,000 of our employees, and an additional 30,000 employees have received advanced AI training. With Wipro as client zero, we are utilizing our in-house AI expertise to develop Gen AI solutions across all units and functions within Wipro. We believe this will help us boost not only the capabilities of our employees, but also make Wipro Gen AI ready. And finally, we are driving execution rigor with speed, helping client centricity and delivery excellence. In this context, we are focused on nurturing innovation in our delivery capabilities by investing in our Lab 45 platform and the Wipro Enterprise Gen AI Studio. We are also incorporating various Gen AI tools throughout our software development lifecycle to enhance both the productivity and quality of our delivery. In closing, I would like to say this. The initial climb is both challenging and exciting. And as a hiker, I am pleased with the momentum we have built in Q1. Across the company, I have noticed fresh energy and renewed dedication towards achieving our goals. And with the commitment and passion of our 230,000 plus employees across the world, I firmly believe we will seize market opportunities ahead of us and will continue to progress steadily, one step at a time. Now, on to the guidance. As we move into Q2, we believe that we are now in a better position compared to the start of Q1. For Q2, we are guiding for a sequential revenue growth of -1.0% to +1.0% in constant currency. We are confident that we can sustain our margins within a narrow band with an upward bias in the coming quarters. With that, let me turn it to Aparna for a detailed overview of our financials. Thank you.
Good evening, ladies and gentlemen. Let me now quickly summarize the financial highlights for the first quarter of this fiscal so that we can then take questions. Our IT services revenues declined 1.2% sequentially in reported currency terms, which is a decline of 1% in constant currency terms, and it's well within our guidance range. We are pleased to share an expansion in our IT services margins of 0.4% year-on-year and 0.1% quarter-on-quarter. We have delivered 16.5% operating margins on the back of a tough revenue environment and even after continuously investing in our talent. Improved utilization, fixed price productivity, and optimization of overheads have been the key levers at play. We expect to gain from the tailwinds of our operational rigor and are confident of being able to operate in a narrow band with an upward bias. We generated yet another quarter of strong cash flows. Our cash flows of $479 million in Q1 is at 132% of our net income. With this, our current investments and cash balance now stands at $5.4 billion. Our other income, net of finance expenses, grew by 21% sequentially and year-on-year. Our accounting yield for the average investments held in India was at 7.6% for the quarter. Our net income at INR 30 billion grew 6% sequentially, and our EPS for the quarter at 5.75 rupees grew 10% year-on-year. In terms of other key metrics, our ETR is at 24.5% for Q1 25 against 24% in Q1 24. Our hedges continues to be in line with our policy. We had about $3 billion of forex derivative contracts as hedges at the end of Q1. Finally, I'd like to reiterate the outlook shared by Srini for Q2 25. We expect revenues from our IT services business segment to be in the range of $2.6 billion to about $2.652 billion. This translates to a sequential guidance of -1% to a +1% in constant currency terms. With that, I'll now turn it over to Nisha for Q&A. Thank you.
Thank you, Aparna. We'll start with the Q&A. Please raise your hand and we will head the mic towards you so you can ask your questions. Just wait for the mic so that the audience virtually can listen as well. And please introduce yourself before you ask your question. Ritu, would you like to get started?
Sure. Hi, this is Ritu Singh from CNBC TV 18. Just to get started, even given your guidance at -1% to 1%, let's say you're at the lower end, that'll be 7 consecutive quarters of negative revenue growth. Just give us a sense of when you see this turnaround, while you say that as you start the second quarter, things are starting to look better. What are the specific areas of green shoot, if you could point out? BFSI, you said for the last 2 quarters has been seeing some improvement, but there's still stress you've highlighted in most other industries. So just a sense on what you're getting from your clients in terms of a turnaround when it comes to discretionary spend, and when you see a meaningful recovery back in the black for Wipro.
So, Ritu, as you know, when we guide based on the current visibility that we have. So, like Srini shared, we're starting Q2 certainly with an improved confidence as compared to how we started Q1, and we are hoping to deliver, a better in-quarter execution. Like you said, there are some puts and takes in the guidance. There are places where we are seeing positive momentum. Americas as a geography, both Americas 1 and Americas 2, we are seeing renewed momentum. Capco will be a third quarter where we are continuing to see the momentum build quite nicely. In fact, even their bookings in Q1 grew year on year, and the outlook for Q2 continues to be good. So we are seeing parts of our business which is certainly recovering. Europe and APMEA are soft, and as a result, this both the hits and misses are covered as a part of our guidance.
Thanks, Aparna. Ritu, let me add some more color to this. The way I see it is the deal pipeline that we have that I talked about, it's very robust, which includes large deals. And the deals in the pipeline is a lot more secular, if you ask me, across the 4 markets, across the 7 industries that we operate in. And some of these deals are very interesting because these are around the industry solutions that I talked about, which can be replicated across these industries and these markets. And that gives a little bit of good news for us in terms of how we can move forward. But having said that, I think the guidance for the quarter is -1% to +1%. I also made a statement that at the beginning of quarter 2 versus the beginning of quarter 1, I think we have a better view of where we are heading.
Can we have the next question from Veena?
Yeah, hi. Veena from the Times of India. I have few questions here. First, on the headcount, there's been a slight increase in the headcount. So is this trajectory going to continue? Also, given that there is a lot of focus in generative AI, how fast are L1 roles really being eliminated? We've been hearing this for a very long time, like for instance, testing or just looking at tickets. Have we hit the last nail in the coffin where such roles are getting eliminated? Secondly, on the variable pay, what sort of a variable pay will your employees be getting on an average? On the Microsoft outage today on CrowdStrike, has that had an impact on work and any advisory that you issued to your employees? And Infosys and TCS, your peers, have announced campus hirings. TCS 40,000 and Infosys about 15 to 20,000. What is it going to be like at Wipro, if you could give us some numbers? And also with the previous year's backlog of fresher onboarding, what is the status, if you could give us some light on that? And lastly, on the macroeconomic environment, can you, is the visibility only up to Q2 or further as well? Yeah.
Lot of questions. We have to keep a track of them. So some I will answer, some Srini will answer, some Aparna will answer. So, I'll just divide. I've written on everything. I'll speak on the variable pay headcount. Okay. Good. So I'll answer some, and then some Aparna and Srini can answer. So let me start by giving headcount. So we are seeing a marginal improvement in the headcount. We have started after a break of a year onboarding freshers from campus. We onboarded about 3,000 odd people in this quarter. We would be onboarding around 10 to 12,000 people this fiscal. We would be completing all our backlog of offers made in this fiscal. A commitment to our, to people whom we had made offers, so that will get done. Not only that, we will also have done our relationships and partnership with certain institutes. So we will go to these institutes and off campus for hiring for next year. Another similar number we're looking for next year. So very clearly we are building muscle so that we are there ready as growth comes back. You would have seen our utilization at going up every quarter. It's reached a peak, and we believe it's the right time for us to look at the supply side so that we're in a much better position. On variable pay, so that gives you a thing on headcount and campus hiring. On variable pay follows the business performance. Being the first quarter of the year, obviously our payouts will be better than what we had given last quarter. So it will be in line with the business performance on variable pay. These were the three things from my side.
Okay, maybe I'll cover the macro environment and Gen AI. Hi, Veena. How are you? So the macro environment, in the context of geopolitics, in the context of the elections that are going on, and I know you're the journalist, you must be reading all the news that's going on. I think it's difficult to predict. There has been a hope that second half will be better than the first half in terms of the macroeconomic conditions, and I'm hoping that will continue that way. But it also varies a little bit more by country to country that we operate in, and also the industry within those countries, right? So, for example, if you look at our BFSI segment, and if you look at specifically Capco, let me say, we have seen growth coming in both from Europe and the US. So it's becoming a lot more secular. We are also actually focusing on a country like India and Asia Pacific. So that gives you a view of banking and financial services. If you look at manufacturing, especially in the context of automotive, again, that's something that we are seeing a little bit more traction. And especially if you look at both the US and Europe, we see a good traction. And one of the deals that I talked to you about is one of the large automotive OEM. And the third one was on the consumer business, right? If you look at retail, consumer CPG companies, travel transportation companies, right? They're also kind of started investing because they need to invest to improve their whole, customer journey, right? In that context, there are, investments that's going on. So to me, while it's unpredictable, hopefully it will settle down second half, but I'm not an analyst to predict, right? That's number one. The second question was in Gen AI, will the L1 roles go? And I've been hearing this, what's going on, right? So the way we see Gen AI, right? We are, let's put it to three parts, okay? We are leveraging Gen AI. We are powering our industry solutions, both cross-industry and industry solutions with Gen AI. To me, that's a very dominant way of going into the market from a Gen AI perspective. The whole network management that we talked about, the whole pairs, solutions that we built for the CMI thing that I talked about, right? These are all Gen AI powered. So the point is Gen AI helping you get better? The answer is definitely yes. Is it making your solution much more smarter? The answer is yes. The second part is the managed services that we do, right? The infrastructure piece, the business operation piece. What we are doing is we are infusing Gen AI there, right? Whether it's to do with some kind of a contact center, let's say, or a back office operations. And Gen AI is actually evolving on an everyday basis. And it's a very exciting time for us, as we do that. The third part is how do you leverage Gen AI in the context of software development lifecycle, right? Gen AI is predicted to bring in a lot more productivity, both on the coding side and also testing side. And that's something that, we are talking to the clients, we are working with the clients, and it's a journey. All I can say is that in the medium to long term, the Gen AI really will take off. The cloud story, right? It was like a hockey stick. I would say Gen AI will accelerate the whole process. Now, whether will it be a hockey stick, I can't predict, right? So that is when you will see a significant view on how this whole thing of L1 and other things that you're doing it. But to me, Gen AI is going to be a very strategic for Wipro.
You had a question on CrowdStrike. We can confirm to you that there is no impact. Oh yeah, you want to go?
Oh, okay. Sorry, I missed that question. You asked so many questions, Veena. On CrowdStrike, number one, no impact to Wipro. Number two, we are actually talking to the clients, trying to step up and help them because we are following the Sun model, Europe and US, right? And we are seeing the impact of CrowdStrike. So all I can say is that we are ramping up ourselves to help our clients. We are going by client who use the CrowdStrike for them. I think that's the state we are in, and we are prepared to help our clients.
Can we have the next question from Sanjana, please?
Hi. Yeah, thank you. Hello everybody. I'm Sanjana from the Hindu business line. So I think there has been some continued softness in key verticals like E&U, manufacturing and communications. So when will you see green shoots in this business? And also, Aparna, you mentioned that Capco has gained some momentum. So some analysts have pointed out that Capco will benefit from discretionary spending by BFSI clients. Do you think that's true? And a few years ago, the former CEO mentioned that cutting down on clients will help concentrate on profitable deals. So I think compared to the last quarter, you have let go of around 7 customers. So is that still the strategy that you are following? Thank you.
Okay, I'm going to start and maybe Srini can add. So on ENU and manufacturing, like Srini said, we are experiencing some continued softness. This is largely because of some of the large programs that have ended and we have not won enough. And as a result, the growth rates are, soft. If you look at our wins in manufacturing, we've had a couple of good wins. We have a good pipeline. We need to convert it. And on communications, you would have noted that we announced a large deal. So that's one step in that direction. I think we have a good pipeline. We will need to convert. On Capco, yes, we are seeing better momentum, and that's secular, not just in BFSI. They also have a good presence in energy. And the growth and the bounce back in Capco is fairly secular, both across the geographies they operate in, the service lines they operate in, and the sectors they operate in, right? In terms of the client attrition, you're noticing some volatility. It's a result of, the decline we've had in our revenues. I wouldn't be too concerned. Srini stressed upon it. Our top 10 clients are growing faster than the company. In fact, they grew sequentially 1.3%. If you look at our top 25, which we don't share in the data sheet, but I can share with you, the 38% of our revenues come from top 25 clients, and they've grown 1% sequentially as well. So look at our performance in our top clients, and that should give you some comfort.
Uma, please go ahead.
Sanjana, I think she was very precise. I don't have much to add.
Yeah. Good evening. I'm Uma Kannan from the New Indian Express. You spoke about 5 key strategic areas. Like you also mentioned in your presentation. So can you give us some clarity on how are you building on these priorities, especially large deals first? And second, also looking at your past, can we expect some acquisition that can happen this fiscal? Like you were also mentioning about automotive, can we expect some acquisition this fiscal? Thanks.
Thanks, Uma. Let me first talk about the M&A. M&A is our strategic. We look at what are the white spaces that we have, both on the technology side and the industry side, and it's something that we'll constantly look out, and we will do the right M&A at the right time. So that's part of the strategy, and we will continue to do that. And we have a very solid M&A team, and as an organization, we have been acquisitive, and we will continue to do that. But you have to have the right asset at the right time for the right white space that you have. That's on M&A. On the 5 strategic priorities, okay, I'll go from the bottom up, okay, if you can recollect all the 5 strategic priorities. One is bringing in execution rigor with speed on the client centricity aspect of it, right? How do you up our delivery excellence, right? How do we up our delivery innovation? So we got to invest. So on the delivery innovation, we are investing in the platform, which is Lab 45 and our studio. The studio has a bunch of accelerators, it's got tools, right? And it's one place where any 230,000 employees can go and plug in and play the Gen AI aspect of it. That's where we'll continue to. On the delivery excellence, we got to deliver to our clients what we promise and more. That's my expectation. Now, then the next one was build talent at scale. And Saurabh talked about the next gen associates going to the campus, bringing them, training them, right, grooming them, giving them opportunities. That's one. Second, for ourselves, upskilling across technologies which are both emerging and which are core, right? You can't miss the core as well. So if you look at the industry and cross-industry solutions that we are, winning from the market, we need these people to understand a business context of our client, not just the technology aspects of it. So with iAspire, you should see the demo. It's really fascinating, okay? So I think the employees can actually come and say what their aspiration is, how they want to build their careers. And for example, Uma, if you want to be a chief operating officer, iAspire will tell you how you can actually progress and how you got to train yourself and you got experience. So that's where we want to build a talent skill, and the talent is going to be diverse and it's going to be global, right? Then coming to the point on large accounts, right? Aparna talked about how our top 10 accounts, how our top 25 accounts are grown. My aspiration is how our top 100 is growing across the spectrum. And what we need to do is we got to invest. We got to understand the client. We need people who understand the customer business, understand the technology, how do you articulate, how do you solution, right? And it's a journey. The way I see it, it's a journey. And the last one, or the first question, you started with the large deals, right? Large deals, the networking deal, let me talk about that, right? The telecom networking deal, it wasn't easy. First and foremost, you need to understand what the client's business problem was, right? And then articulate how you can actually solution it based upon our industry solution that we have already built, which is powered by AI, right? So when you show the context and how you can give the business benefits, I think, it's a lot more domain and consulting led. I think that becomes a go-to strategy. My expectations from my teams is that how can you replicate that across, right? I'll just give you one example. The healthcare. Today, healthcare is going through tremendous change. Let's say United States of America. There's Medicare, there's Medicaid, and there is ACA care. How can you bring all elements of this at a client and impact their business, impact the experiences of their members on this platform, thereby, helping the client as well as their members, right? So that's how the thinking has to be. And if you articulate that value proposition to the client, I think we can have a better conversion. That's my aspiration.
Can we have the next question from Sai, and then Padmini will come to you right after.
Hi everyone. You just gave some passing mention on the customer bit, but I just wanted to know why the 75 million bracket has fallen by 3 and 50 million is fallen by 2. Even if we think about a rejig, I don't think there is any fall to the brackets that are lower, 20 million or 10 million. So can you tell us why that's happening? Probably deals have been closed. And another thing I just wanted to know, this -1 to +1 range, how much of it is specific to Wipro, and how much of it is specific to the macros around? Because like since last week we're hearing there have been green shoots. BFSI in the US has been improving. So can you tell us some indication on when you see Wipro specific issues ending and turnaround in place? Thanks.
Sorry, I didn't get your name.
Sai from Reuters. Sai Ishwar.
Hi, Sai. Let me, Aparna, can I answer these questions? Okay. So, number one, Sai, the way I see it is that I look at the top 100 accounts of Wipro. There will be some ups and downs on that. I can, maybe Aparna can give a color to that. But having said that, what is important is execute our strategy in each of these accounts. The point you made, how do you shape demand within those clients? How do you work with partners, bringing the right value proposition you want to do? I think that's I'm focusing on. Onesies and twosies, I'm not too worried. Sometimes, the customer may reduce the spend depending upon how their business is performing and so on and so forth. So that's not a big concern item for me. What I'm focused on, the set of accounts that we want to really go after and become dominant and become a true partner for them. That's number one. Coming to the range on -1 to +1%, right? There are factors in the market, but there are also our internal factors. Like Aparna talked about, if you look at specifically on energy and utilities and manufacturing, right? We have had a soft quarter, and we do have, we'll have to recover that softness that we had through winning deals and growing the accounts. Now, if I have to look at the broader brush, right? I think we talked about it. America's one, right? It continues to grow, which is good news. Within America's one, I've given you a color of healthcare and communications also coming back. Consumer is also coming back, right? So that's good news. America's two, and quarter one, you've seen a little bit of a decline. And however, I said BFSI, banking and financial services, which is very dominant within America's two, and the deal wins that we got, which is almost 12% sequential growth that we got. That gives me the optimism on America's too in the midterm in terms of the growth. Now, Capco, I did tell you that it happened. It's growing both in Europe and also in the US. So 3 of those are I see the positive momentum. Now coming to APMEA, I did tell you that we've got a new leader and we've got to come back and share the strategy, how we want to do that. Second is on Europe. We do have a good deal pipeline. We need to convert that to bring back the growth in these two geographies. That's how I would paint it. And that's how the quarter one is -1 to +1%.
Padmini, you can go ahead. I'm sorry.
Hi, I'm Padmini from Financial Express. So how many of your Gen AI POCs are into production right now? Are you seeing any $1 million deals in that space? Is it short term or long term? And we saw two of your senior executives changes in the quarter. Is it part of your strategy and should we expect more, especially over the weekends?
So Padmini, let me take the second question first. I did stand in front of you last quarter. I said we are going to have 5 strategic priorities, right? I came back and did talk about the 5 strategic priorities. I also said that I'm going to get better at the strategic priorities after my meetings with the clients and the employees and the stakeholders, including partners and influencers. So we will continue to stay focused on 5 strategic priorities going forward. That's number 1. Number 2, I did tell last quarter that we are not making any structural changes. We're going to have 4 SMUs and 4 GBLs, and that continues. There's no change. I did mention that people and leadership will continue to evolve. I can assure you it will continue to evolve. In fact, we have also launched Wipro Leadership Institute, where we want to groom people across the bands who actually say to I aspire that I aspire, right? And build a career growth. And that's going to be evolving, that's going to be changing. So that's my response to the second question, second point. Coming back to, you want to add something?
I just want to add that there's a deep bench strength of leadership. So all exits which have happened, you have seen, we have people who are internal talent which have taken over those positions. So that's the strength of the organization, and there is no reason for us to be any worried about any such changes happening.
So Padmini, on Gen AI, I think I may repeat what I said in the past. So see, there are multiple aspects of Gen AI. I don't want to give the number of proof of concepts, number of use cases that we have at this point in time, because this is ongoing. Gen AI is something that we will continue to involve across process areas. Some of them may work, some of them may work. That's why the clients are doing a lot more proof of concepts. Please understand, when you are implementing Gen AI, it has to be responsible, it has to be secure. That's very critical for the organizations. As you continue to innovate or service delivery in the context of Gen AI, try to infuse Gen AI into managed services, impact business process through Gen AI, and also bring in upside to new business for our clients. It will be a journey. Like I said, midterm to long term, it will dramatically accelerate. But for now, clients are building that, and some POCs may go into production, some may not go into production, and that's, I think, a journey for us and for our clients across industries.
Haripriya, you can go next.
Hi. Sir, you mentioned about the prominent deals that were won in this quarter, but...
Haripriya, can
you louder?
Yeah. Am I audible now, sir? Sir, you mentioned about the large deals that were, prominent deals that were won in this quarter, but when we look at YOY numbers for both total bookings and large deal TCV, we see a dip there. So how should we read into this one? Yeah. And just expanding on that AI thing that you were talking about, some of your peers have decided to call out the revenues that they're getting from the AI deals, while one more peer has said that because it's baked into everything, we can't call out a specific number. So how are you looking at it? Also, you must be aware of the recent Karnataka's proposal to have local job reservation. Although that's on hold now, as a prominent company in Karnataka, how are you looking at this, and what's your opinion on that?
Haripriya, again, you asked me 3 questions. Okay, let me come to the large deals first. I think we came across from a quarter 4, we had 18 deals to quarter 1, which is 10 deals. There are certain deals we could have closed in quarter 1, which are switched to quarter 2. but I know I'm not really worried about that. Like I said, large deal pipeline is robust. Focus is to do conversion, period. Coming to Gen AI, I think there are two sides to that coin, right? You give both the answers. You are asking me to pick one or the other. I'll pick the second answer. And the Karnataka...
I think the Karnataka thing, it's be appropriate for us to give a comment once we are clear on what's the bill is, because I think the government itself has taken it and deliberating it. So once it comes out, we will be in a position to comment on that.
Anika, you can go next.
Hi, I'm Anika from Business Standard. So my question would be, if you could throw some light on your hiring plan for FY25.
So I spoke about hiring from the campuses. 3 or 4 things I want to call out here. You have to see hiring in context of 3 or 4 parameters. You have to see in context of our utilization, which is an all-time high. You have to see in the context of attrition, which has been stable with an upward bias. You have to see in the context of demand, which is coming up. And if I put all these 3 things together, we are hiring freshers from campuses this year and a plan to go next year. That's at scale. And we continue to hire specific skill sets across the globe based on demand regularly. So that's what I would put. I've given you some brief idea of numbers for the freshers. Rest will be demand driven as we see more demand coming up.
So you can go ahead. Yeah.
Hi, I'm Narayankar from UNI.
So you'll have to speak a little bit louder.
Speak louder, please.
Am I audible now? Yeah. When I look at your I'm Mr. Narayankar from United News of India. When I look at profit growth year on year, you're doing fairly very well. But when I come to EBIT margin, TCS is 24%, Infosys 21.5%, HCL Technology is 18%, Wipro, they have done very well this time, 16.5%. So how do you plan to improve your margins and meet your aspirational margin level of 17%?
Can you hear me?
Yeah.
Hello? Yeah. So we've been in a journey. Over the last 8 quarters, we have continuously improved our operating margins. The last 6 quarters, as you know, has been especially noteworthy given the weaker macroeconomic environment which has impacted our revenues. The operational rigor is visible in our utilization numbers, which are now at a recent high. If you look at what are the levers that we think we can flex as we go forward, I've spoken about this: fixed price productivity, rotation, improving our pyramid, and rationalization of our overheads, especially some of the acquired entities that we have as they get integrated with the Wipro. Some of the G&A synergies can be realized. We are looking to realize them. So these are some levers that we can still flex. For us to deterministically move towards our aspiration number of 17% and beyond, it will definitely need the revenue growth to come back. So that also will be an important lever. Those are the things I wanted to share.
Now, what timeline would you give?
No, we're not giving any timeline, sir, because we don't guide for margins. I think we've shared that we are confident of executing it in a narrow band with an upward bias. And I think that reflects our confidence in our ability to continuously improve our operations.
So we have time for a few more questions. Beena, if you'd like to go ahead, and Reshab, you can go next.
Yeah, hi, this is Beena from the Economic Times. Srini, if you could just, kind of tell us, what kind of Gen AI projects are you seeing currently out of your current projects, if in percentage terms, if at all you could call out, and if at all, when can you call them out? What is the timeline that you're looking at? And, in terms of hiring as well, you mentioned, 10 to 12,000. Is this going to be through campuses or off campuses? And has the onboarding of the previous offers already been done? I wasn't clear about that answer. So if you could just tell us that. And overall, how do you see while you've answered a little bit on the macros, in terms of your conversations with your clients, are they still being optimistic the way you've been suggesting? And do you see this momentum building up, across the quarters?
Can I need to take the hiring, then I'll answer the rest.
Yeah, so I think you came a bit late, missed it. That 10 to 12,000 is hiring of freshers, which will have both component of hires from campus and off campus. And we will, in doing this fiscal, we will meet all our commitments of the past offers which we have made. So we'll onboard all the people in the past whom we have made offers during this fiscal. So that's on the hiring. All pending. So what I said, all the pending offers which we have. So a combination of that plus, so we'll conclude everything. We will make sure that no of the pending offers are there. And this was a big commitment we had made, that as we look at hiring, and we have started fresher hiring after 1 year. We didn't do it in the last fiscal. This is the first quarter where we done about 3,000 people. We had made a very explicit commitment that when we start hiring, we will honor our commitments, and we stand by that.
Hi, Beena. You didn't hear my answer to Haripriya, right? I went for the option 2. So, I know Gen AI is fascinating, let me tell you. I'm personally very excited. I was one of the first guys to take the test and passed it, 20 out of 20 at Wipro. But the fact I'm trying to say is that Gen AI will be infused in our existing business. Gen AI will be, leveraged for software development life cycle, and Gen AI will be powered. Gen AI will power our industry and cross-industry solutions. So there are multiple components that's going on. That's why it's very difficult to predict what it is. For example, the 4 deals I talked to you about today, right? All of them are powered by AI. Now, how do you, calculate that? So I'm not able to give you a time frame in terms of when we will do that, when we will come and publish to you. But that's something that obviously we're thinking internally.
Hello, sir. Samir from ET. To add one question for the Beena.
I'm sorry. I didn't
Samir
answer.
from ET.
Yeah, ET, right?
Yeah.
I didn't answer the Beena second question. Okay. So I was just looking at what it is. So is it okay if I answer that question? Thank you, sir. So on the macro environment, you talked about the optimism, right? The clients that I have met over the last 90 days gives me confidence and comfort of the opportunities we have ahead of us, and Wipro being on the table to help our clients. Okay, and from I talked to you about. I don't want to repeat it about each of the markets and each of the industries. Like I said, manufacturing and E&U for us is a little bit softer, but once you start winning deals and coming back into these accounts, it should organically start growing.
This is Samir from ET, sir. You spoke about green shoots in Americas and Capco. Can we take like the slippage in active clients are more from APMEA and Europe?
See, I think Aparna did talk about it. We had some large project coming to close, both in manufacturing and energy and utilities. It's a one-time phenomena that we experienced, because of which in Q1 you saw that, right? So it's to me, it's more of a one-time here and now. Now we need to build that gap and keep going forward. That's how I would articulate, Samir.
Rishabh, if you'd like to go ahead.
Hi everybody, Rishabh here from Moneycontrol. I had 2 questions, both for Srini. The company has a stated goal of reducing the tail end of the customer size So we have seen that the tail end has been reducing. For example, $1 million and $3 million, both have reduced. But we have also seen that the large ones, that is 100 million, 75 million, have also gone down. So would you like to revisit that strategy? And on the second one, second question that I have is, continuing on the question on leadership churn. The past two resignations that we have seen, the big leadership exits, are both from the Capgemini, your rivals, stable. So should we, what should we expect on that front, and what's being done? Thank you.
So I'll take the question on the tail account, exit strategy.
Sure.
I think it was very, very localized, especially in the context of something that we were doing in APMEA, more specifically in some parts of India and Middle East. I think that's been executed. What you're seeing as attrition is also a result of the continued softness in discretionary spend environment. And that's perhaps impacting some of our $1 million accounts, right? I think, like Srini has already answered, we are focused on growing our top 100, right? It is an aberration. We've lost, a few in perhaps the greater than $50 million. But if you look at the greater than $20 million, it's flat. So there will be some volatility that could happen within these buckets. But our emphasis on investing in our top client stays, and that should show results. And our top 25, like I said, continues to outperform. It's growing 1.3% sequentially. So that should give you a lot of comfort on our strategy working. On the leadership exit.
So Rishabh, let me rephrase and repeat what I said. As an organization, we are focused on 5 strategic priorities that I called out. Second, the focus is on execution rigor with speed. And third, people and leadership will continue to evolve along with the strategy and execution rigor. Period.
We are over time, but we'd like to take one last question from Sonal.
Yeah. Hello everyone, Sonal Chaudhary this side from Deccan Herald. So, like Srini highlighted that America is seeing a better demand. So, do you see this demand sustain going ahead, especially now that inflation seems under control and that a rate cut is likely from the Fed? Secondly, your attrition rate has remained almost similar, 14.2% the past 2 quarters, and currently it's 14.1%. Now I know that it's not possible to actually, predict what's going to happen next, but is there an outlook on that front? Secondly, what's your outlook on the BFSI for the coming quarters? And are clients resuming large ticket spending? Yeah, that's it.
Okay. Sonal, let me answer the demand. Is it sustained, and BFSI, right? Those are the 2 questions let me answer. You're absolutely right. Inflation, rate card, everything will have an impact on the discretionary spend of our clients. From our vantage point, since we gave a guidance for just Q2, like I said, BFSI, I'm very positive for Q2. Second, I also said second half, the general trend is that expectation is irrespective of the election year in the United States of America. The second year is expected to continue to grow. And you don't know what you don't know, but that's what they're saying it. And from our vantage point, we continue to see the deal momentum, and it's reflecting in the deal pipeline. So our job is to go and convert those deals that are in the pipeline. So that's on the demand situation. Specific to BFSI, like I said, the BFSI actually, we are going to see, thanks to, I give the example of Capco, right? Capco is tip of the spear for us when it comes, it's a strategy and consulting led, and Wipro is actually works partners to execute that aspect. So if the tip of the spear continues to grow both in Europe and in Americas, that's positive news for us. So that means there is a discretionary spend that continues because Capco does mostly discretionary spend. So that's the color I can give you.
So on attrition, yeah, it's been more or less flat last few quarters. But I said that we are seeing a slight uptick, which could be function of demand environment improving, but we are keeping a close watch. We are comfortable right now given the supply side actions which we have taken in anticipation of the same.
We will have to conclude our Q1 FY25 earnings press conference. For all the follow-up questions, we are very happy. Please reach out to the media relations team. And thank you, and we'll see you next quarter.
Thank you. Thank you.
Thank you, everyone.